Hi everyone, welcome back to the Road to Retiring channel. I hope you're doing well. Today I want to speak about a value stock that I think is at a good price right now. But before I do this, I want to make sure that you're not thinking that I think every stock's at a great value, as I've been speaking a lot about good value stocks recently. So I wanted to show you my metric meters sheet. If you scroll over, you can see which symbol each of these relate to. And to have access to this, you can get access to this in my Patreon, which is $1 a month or more, however much you would like to pay. But you can see 5 out of the 41 stocks that I want to own that meet these metrics are currently at a buy value. So it's not a case of me recommending any one I see. I do have a certain method which makes me look for ones that are at a good price now. And yeah, if you would like to see those, including the higher risk margin ones which are listed here, then you can get that from my Patreon. But today I wanted to speak about PayPal. Now, PayPal has some ridiculous movement over the recent years. You can see it after the COVID crash in 2020. It just never stopped growing. What is that, 876 to 300, about a 400% return in just over a year. So obviously ridiculous growth rates, never sustainable, and now it's absolutely collapsed back down. But I actually think it's at a good value now. So let's go into why and let's have a look at it. So looking at the earnings first, I have set an earnings growth rate of 10%. This is where I feel comfortable with, something that they can achieve. The analysts are expecting close to 15, and the realistic growth rate came out at 14%. So I think setting that a little bit under at that 10% mark, I feel comfortable that's something they're going to be able to achieve. Discount rate, as you know, I like to go for 9.5%. There is no dividend yield with PayPal, so keep it at that 9.5%, and that's just the annual growth rate we're going to be looking for, on top of a 15% margin of safety. Now, the reason I've gone with a 15% margin of safety is if we look at the metrics, you can see their return on invested capital is unfortunately below that 10% mark. So I'm not super confident that the management is investing funds efficiently. However, I'm not worried that they're going to be in any imminent financial trouble, as their free cash flow can pay off their long-term debt within 3 years, so it passed that check. And in terms of their total annual growth rate across equity, EPS, operational cash flow and revenue, that's sitting at 12%, so that's just nicely above that 10% benchmark we like to look for that. So we're not going to set the margin of safety ridiculously higher, around 25-30%, as it's only the return on invested capital which has fallen under our check, and also it's just fallen under. So we like to look for 10%, and very typically it trades at that level. You could see 9.84% in 2016, then rose up to 16% in 2020. Unfortunately now it's at that 7.85%, but if we were to take an average, you can see it's been above that 10% level since 2017 through to 2021. So I'm pretty confident with it still, and hopefully that will bounce back up again in the near future. But for now, I've marked it down as a red, and we're going to increase our margin of safety to 15% because of this. Share dilution, I've gone for minus 0.5%, as they are cutting back shares. They've been buying back at a rate of minus 1.15%, cutting back from 1,200 million down to 1,100 million. But I think we're going to look just at the earnings now. So a $4.88 earnings estimate for 2023 and a earnings growth rate of 10%. I've gone with a PE of 20. Now this is where the PE is a bit questionable with PayPal. If you have a look here, PE ratio has never traded below 34 since it was formed basically in 2016. So I feel very comfortable with a 20, considering it's always been at these levels like 30. And if you look at the sector median, this is sitting around 20. It was at crazy levels, 79, 80, where it was always going to eventually crash down, and I still think it could fall further back to a relatively stable level around that 20 sector median mark. That's where I feel comfortable, and with that 10% earnings growth rate, a 20 PE multiple, and earnings estimate of $4.88 in 2023, that brings our price over earnings ratio fair value to $87.03. We're 15% under right now, so really nice value for the price over earnings. In terms of the price of sales, we've gone with revenue growth of 8.05%, which is pretty much in line with analysts' expectations here, as you see, moving from 29 billion in 2023 to 37 billion in 2026, which is similar to what we have here, 29 billion to 37 billion in 2026. So we've gone for that revenue growth rate. Current revenue obviously starting at 29 billion, and we've gone for a price over sales of 4. Now if we look at PayPal's price over sales, this has never traded as low as it is right now. Typically right now it's at a level of 3, and that's been like that over the last year. You can see 3.1, 3.7, 3 and 3.1 again over the last 4 quarters, but prior to that it was at 5, 8, 12, 14. It was way too high, and it was pretty stable around the 5-6 mark for quite a few years before that boom during the COVID time. So I feel pretty comfortable at 4. Right now it is at 3, but I feel like it will get back to at least more of an average around that 4 level. So that's what I've gone for price over sales, and that brings us a price to sales fair value of $82.66, so 10% under that currently right now, so it's very nice in terms of that. Lastly, I want to look at the cash flow, going for 12%, keeping it pretty much in line with earnings at just a slightly higher rate, as the operational cash flow takes into account the net income. We can see the cash from operating activities has grown quite nicely. Unfortunately, the funds from operations did fall in 2022, but it's been moving up 24%, down 19%, then up 116. Not the most super consistent thing, but over time, I'm confident with a 12% cash flow growth rate, pretty much in line with earnings, just slightly above. So I've gone for 12% there. Current cash flow sitting at 5.8 billion, and I've gone for a price over operating cash flow value of $18. Now if you look here, price over cash flow, sector median's at 19.59 and the forward one is at 17.4, so 18 again, it's pretty much in line with the sector, and the PayPal 5-year average is actually trading at 38.94 or 27.47, so we've allowed plenty of room for it to come down. And I think at 18 I feel comfortable with those levels, similar to price over earnings. And for those levels, we then see a $88 fair value right now in 2023, with an average fair value across the 3 of $85.95. So that is the level I'm going to feel comfortable buying under for PayPal, and I'm actually buying the stock today and adding it to my portfolio. In terms of the average 2028 value and the what compound annual growth rate we can expect to see, that is going to be $159 is the average prediction based on these estimates in 2028, and that would be a 16.57% compound annual growth rate, which would be absolutely amazing if we were to achieve that. That would be fantastic. But I'd love to know if there are any stocks that you guys want me to look at and give my own estimations for that you're potentially interested in, and if there are, let me know in the comments and I will get a video out on them, because I enjoy doing this and I think it would be good to share some which aren't maybe the best of value right now, because as I say, I think it's good that you'll have that information where you can think, oh, I shouldn't go into that at the moment. So I would like to start sharing more content like that as well. But it's been Road to Retiring. Please like and subscribe if you enjoyed the video, and I'll catch you in the next one. Bye.